So today's Friday, December 20th, 2024, NASDAQ weekly time frame after the collapse that we had on Wednesday, 1,000 pips or so. Um, we tapped into this weekly volume imbalance. There's two of them. There's a couple right there, and there's this main one that's outlined with the words right there. This is your drawn liquidity, so essentially price was reaching into that. Also in line with this weekly order block, the 50% of it, I didn't mark it up, but nonetheless, the bottom weekly volume balance is what's important because when we come down to the daily time frame, the lower weekly volume balance right there is in line with this daily this daily SIBI consequent encroachment. So the 50% of this daily fair value gap is also in line with the weekly and volume balance discount low, uh, right there. So weekly volume imbalance plus the daily fair value gap, two higher time frame PD arrays in one, and then coming down to the 1 hour time frame market maker buy model where we had the buy side liquidity price tapped into the weekly volume balance, and then the daily SIBI, 50% of it, the daily fair value gap, tapped into that, and then we completed the market maker buy model right there, taking out the buy side liquidity from yesterday, Thursday, and then 15-minute time frame, 9:30 a.m. opening bell. 15-minute fair value gap, we dipped into it, institutional order flow entry drill in line with the weekly volume imbalance premium high, so high time frame PD array in line with the 15-minute fair value gap, pushing price up. And then the naked chart, I believe, is right here. So without the lines, we just had the 15-minute fair value gap, price dipped into it, institutional order flow entry drill, and then we took out the buy side liquidity right there. And then this is what the 1 hour, sorry, the 1 minute time frame looks like. Zooming into this level right here. So just before I get into that, 9:30 a.m. opening bell came up, power of three, accumulation, uh, manipulation, and distribution, taking up buy side liquidity from the, I guess this would be like prior or beginning of New York session, just around there. Took out buy side liquidity, came down into taking out sell side liquidity below 9:30 a.m. opening bells low. So this right here is the 15-minute wick right there, taking out sell side liquidity to push price higher. There is a 1 minute inversion fair value gap right there being used to support price to push it up higher, taking out buy side liquidity and breaking above market structure. Came back down into this 1 minute inversion fair value gap to push price higher, and then a 1 minute fair value gap. Institutional order flow entry drill to complete the rest of the day. But real quick, just to zoom in, this was the inversion fair value gap I just showed you guys on the 1 minute time frame. So this inversion fair value gap was being used to support price, taking out buy side liquidity, breaking above market structure, coming back down into this 1 minute inversion fair value gap, breaking above market structure, 1 minute fair value gap, institutional order flow entry drill, and then the rest of the move to the upside, and so on and so forth. So that's pretty much it.